Somebody asked me, I think it was January-ish, something like that. They asked me, so what do you think NVIDIA is actually worth? And I says, well, if you look at the book value, you look at the fundamentals of the company, you look at their sales basis, you look at their products. The AI is an amazing product. You look at their graphics card, which they're overpriced. They're good, still good products, but I mean, they kind of have a monopoly on that. And you look at what that all equates to in terms of like the market cap, the fundamentals of the business, because they've grown their income amazingly in the past 3 years. I said they're probably like a, in a low, super low, depressed market, $1.4 trillion market cap, all the way up to about a $2.2 trillion market cap. I said they're probably going to settle somewhere around 1.7 to 1.9. I was like, how did you know that? And I went in through all of these charts and like all this math and all these like the stuff that's in Tom's head. Like, how did you know this? Well, it's because it's up in here somewhere.
There's actually two or three equations that you could use to come up with the fair market value of the company. So there are ways to actually figure that out without going into all the numbers and getting the deep depth. Now, if you do that, you get a better idea and get closer to what the actual company's worth. But yeah, there's a couple equations. If you want to know what those are, go ahead and post it. Maybe we'll do a video on it and how to do all those.
Right.
Equations.
Now, like tangible book value, trailing TTM earnings per share, like the historical, basically what their price relative to their earnings. There's a lot of things that you can come up with that are well known like metrics.
Yeah, those are quick ways of getting a roundabout idea of what it's supposed to be.
Yeah, but then you still have to go into the balance sheet and actually do some math on it to come up with a number to figure out, okay, this is what that we really think they're worth. Now, I thought it was really interesting that when I said that, I was going to short the stock, and I talked about this last week. I was going to do $10 million, and I didn't do it.
And he's going to talk about it next week, and then the week after that, and the week after.
I'm going to complain every week. Why didn't I do it? Well, one, if you short a stock, there could be infinite losses if it keeps going up. Now, the Fed's job is to manage inflation, not deflation. Brian said infinite losses, so it's his fault. But I bring this up only because we are confident in our ability to make money long term without having to do something like that. Because yeah, you don't want to gamble your money. So when we're looking at investments and you're looking at the growth stocks, and we look at like what we just said with the hydroponics farming and some of the indoor stuff that could be a great opportunity, we're going to be looking at the fundamentals and the product of the business. And if they don't have good finances or good numbers, we're not going to buy them. So that's how you come up with a portfolio like this one that can do this level of income. You're not going to make these kinds of numbers if you don't do that. And yes, I realize it's work, and I realize that, you got to do that. But this is also why we don't rag on like JEPI, SCHD, and some of the other ETFs that are buying some well-known income plays. I'm a little confused why SCHD would buy both Pepsi and Coca-Cola.
And Verizon and AT&T.
Like, why? You own them all at that point. Like, what's the point? There's no competition there. So
there's this thing called the SPY that you could buy.
Just buy an index. So there's a little bit of that, but as far as that goes, like the fee for those loaded ETFs is like 0.5%, maybe 1%. And those fees are what you're paying for. You're paying for those people to analyze the businesses and do what we're doing to make you some money. So we're not going to rag on them too much. And if you're like Charles Schwab or from one of those entities, we're actually looking to get some help, maybe get some sponsored and certificates so that we can do that ourselves. So instead of telling people, oh yeah, you can follow along and do all this research with us, we're hoping that maybe we just have a ticker symbol and then they just buy that.
Spire ETF. Wouldn't that be fun?
That would be, well, it'd be a lot easier.
It'd be fun for the